Section 1. The million-dollar question. Is crypto the future? Imagine waking up in the year 2030. You grab your morning coffee. Instead of tapping a credit card, you simply scan a code with your phone. Instantly, a fraction of a digital coin, something that exists only on the internet, zips from your digital wallet to the coffee shops. There's no bank involved, no waiting for the transaction to clear. It's just you, the coffee shop, the blockchain. This isn't a scene from a sci-fi movie. It's the future that many cryptocurrency enthusiasts have been dreaming about for years. Will this actually be our reality by 2030, or is this all just a giant digital experiment that will remain on the fringes of our financial world? It's a fascinating question and one worth exploring. Everyone seems to have an opinion on cryptocurrency. Some people will tell you it's the single greatest financial innovation since the invention of money itself. They see a world free from the control of big banks and governments, where transactions are faster, cheaper, and more secure for everyone involved. On the other hand, you have people who believe it's nothing more than digital fool's gold. They point to its wild price swings and the confusing technology as reasons why it will never ever replace the dollars, pounds, or yen we have in our pockets. The truth, as it often is, probably lies somewhere in the middle. The journey to 2030 is still unfolding, and the path for crypto is anything but a straight line. The idea of a completely digital, decentralized currency is undeniably powerful. It promises to give individuals more control over their own money. Think about sending money to a friend or family member in another country. Right now, that process can be slow and expensive, with banks and other companies taking a cut along the way. Cryptocurrency proposes a different way, a direct path from your wallet to theirs with minimal fees and almost instantaneous speed. This potential to change how we move value around the globe is one of the main reasons why the conversation around crypto just won't go away. It's not just about making money, it's about remaking money. So, as we stand here today on September 2nd, 2025, we are at a crossroads. The technology is developing at an incredible pace and more people are starting to pay attention. But will it be enough to achieve mass adoption in just a few short years? Will we see Bitcoin, Ethereum, or some other coin become a household name that even your grandmother uses to buy groceries? To answer that, we first need to peel back the layers and understand what this whole crypto thing is actually about. Let's dive in and break down the basics, because understanding the what is the first step to figuring out the when and the if. Section 2. What is crypto anyway? Let's break it down. Let's get one thing straight. Cryptocurrency can sound incredibly complicated. You hear words like blockchain, decentralization, mining, and it's easy for your eyes to glaze over. But the core idea is actually much simpler than you might think. Imagine a digital notebook that is shared among thousands of computers all over the world. Every time someone sends or receives crypto, a new entry is made in this notebook. This shared notebook is called the blockchain. Because it's shared and verified by so many computers, it's almost impossible for anyone to cheat the system or change an entry after the fact. It's like having thousands of witnesses for every single transaction. Think of it this way. Traditional money is like a document stored on a single computer at your bank. The bank has all the control. They can see your transactions, freeze your account, and they are the central authority. Cryptocurrency, on the other hand, is like a Google Doc that has been shared with everyone. When you make a change, everyone sees it and has to agree that the change is valid. There is no single person or company in charge. This is what people mean when they say crypto is decentralized. It takes the power away from one central point and distributes it across the entire network of users, which is a massive shift from how things have always been done. So where do new coins come from? This is where mining comes into play. You can think of miners as the digital bookkeepers for the network. They use powerful computers to solve very complex math puzzles. When they solve a puzzle, they get the right to add the next page of transactions to the blockchain, that shared digital notebook we talked about. As a reward for their work and for securing the network, they are given brand new cryptocurrency coins. This process is how new coins are created and how the system keeps itself running securely without needing a bank or government to oversee everything. It's a self-sustaining system built on math and incentives. At its heart, cryptocurrency is just a form of digital money that is secured by cryptography. It allows you to send value directly to another person online without needing a middleman. That's the big idea in a nutshell. It's a peer-to-peer version of electronic cash. Now that we have a basic handle on what it is, we can start to explore why something with so much promise hasn't already taken over the world. The journey has been more of a wild roller coaster than a smooth train ride, and understanding those ups and downs is key to predicting its future. Section 3. The roller coaster ride. Why isn't everyone using crypto yet? If cryptocurrency is so revolutionary, you might be wondering why you're not already using it to pay for your gas or your groceries. The biggest and most obvious reason is volatility. The prices of cryptocurrencies can go up and down dramatically, sometimes in a matter of hours. Imagine if the value of the money in your bank account could drop by 20% while you were asleep. You'd wake up and find that your $100 is now only worth $80. That level of uncertainty makes it very difficult for most people to use crypto as a reliable store of value or for daily payments. For a currency to be useful for everyday life, it needs to be stable. And that's a puzzle crypto is still trying to solve. Another major hurdle is simply how complicated it can be to use. Setting up a digital wallet, securing your private keys, which are like your super secret password, and sending a transaction can feel intimidating for someone who isn't very tech savvy. You've probably heard horror stories of people losing millions of dollars in Bitcoin because they lost the piece of paper where they wrote down their password. For crypto to truly go mainstream, it needs to become as easy to use as Venmo or Apple Pay. The user experience has to be seamless, and most importantly, forgiving. We're not there yet, but many companies are working hard to build simpler and safer apps for the average person. Then there's the issue of speed and scale. Some of the most popular cryptocurrencies, like Bitcoin, can only process a handful of transactions per second. Compare that to a company like Visa, which can handle tens of thousands of transactions every second. During busy times, a crypto network can get congested, leading to slow confirmation times and high fees. Imagine waiting 10 minutes at the checkout counter for your payment to go through. It's just not practical for real-world use. Developers are creating new solutions, known as Layer 2s, to make transactions faster and cheaper, but this technology is still in its early stages and needs to be proven at a massive scale. Finally, there's the simple fact that the world is already built around traditional currencies. Every system, from your local coffee shop's payment terminal to the global financial markets, is designed to work with dollars, euros, and other government-issued money. Shifting this entire infrastructure over to a new digital system is a monumental task. It requires not just new technology but also new regulations, new habits, and a new way of thinking about money. It's like trying to change the engine of a car while it's still driving down the highway. It's a slow and incredibly complex process, which helps explain why mass adoption hasn't happened overnight. So, let's fast forward to 2030. What might the crypto landscape actually look like for the average person? It's highly unlikely that one single cryptocurrency will have completely replaced traditional money. Instead, it's more probable that crypto will be integrated into our financial lives in specific and useful ways. You might have a financial app on your phone that holds both your dollars and some form of crypto, perhaps a stablecoin pegged to the dollar. When you want to send money to a friend overseas, the app could automatically convert your dollars to crypto, send it across the world in seconds, and then convert it back to their local currency on the other end, all behind the scenes without you even noticing. In this 2030 scenario, crypto's role might be less about buying coffee and more about powering a new version of the internet, sometimes called Web 3. Think about digital ownership. Today, when you buy a digital item in a video game, you don't truly own it. The game company does. With crypto and NFTs or non-fungible tokens, you could have true ownership of your digital goods. You could buy, sell, or trade your digital sword artwork or concert ticket on an open market, just like you would with a physical object. This could create entirely new economies and ways for creators to connect directly with their fans, powered by the secure and transparent nature of the blockchain. We could also see crypto becoming the go-to technology for certain industries that rely heavily on trust and transparency. Consider supply chain management. A company could use a blockchain to track a head of lettuce from the farm to the grocery store shelf. Every step of the journey would be recorded on an unchangeable ledger, so if there's a recall, you could instantly see exactly where the product came from. This isn't the most glamorous use case, but these practical, behind-the-scenes applications could become some of the most widespread and valuable uses of blockchain technology, happening without most of us even being aware of it. It would just be the new, more efficient plumbing of global commerce. It's important to remember that this is all speculation, not financial advice. The future is unwritten, and the world of technology can change in the blink of an eye. The crypto you see in 2030 might be something that hasn't even been invented yet. The key takeaway is that the future of crypto might not be an all-or-nothing situation. It may not be about replacing the old system entirely, but rather about coexisting with it and improving it in key areas. It could become a specialized tool that does certain things exceptionally well, slowly but surely weaving itself into the fabric of our digital lives. While a tech-savvy future in 2030 sounds exciting, we can't ignore the very real roadblocks that still stand in crypto's way. The biggest one is regulation. Right now, governments around the world are still trying to figure out what to do with cryptocurrency. Is it property? Is it a currency? Is it a security? The rules are unclear and often change, creating uncertainty for users and businesses. For crypto to become trusted in mainstream finance, there needs to be clear, consistent rules that would help protect consumers from scams. It would also give businesses the stability to invest and build. Another major challenge is environmental impact, especially Bitcoin's proof-of-work mining. That process uses massive amounts of electricity, comparable to whole countries. That has sparked criticism and blocks acceptance by eco-conscious people and corporations. Newer systems like Ethereum's proof-of-stake are more efficient, but public perception of crypto as an energy guzzler persists. The industry must innovate toward greener solutions to gain social acceptance. Security is also a top concern. The blockchain can be secure, but platforms and apps can be vulnerable. We've seen exchanges hacked and people lose life savings. Average users need ironclad, user-friendly security to feel safe. That means better wallet technology, more secure exchanges, and possibly insurance options to protect users. Trust is the foundation, and crypto must build and maintain it with the public. Finally, the human element. Education. Most people still don't understand crypto or how it works. Misinformation is rampant, making it hard to separate hype from reality. Adoption needs people to feel confident and knowledgeable. That requires massive education from developers, from companies, and from the community. Until crypto becomes familiar rather than mysterious, mainstream growth will be slow and gradual. So after exploring the potential, the problems, and the possibilities, we come back to our original question. Will everyone be using cryptocurrency by 2030? The most honest answer is, probably not. The idea of completely replacing the money we've used for centuries in just a few years is a tall order. The hurdles of regulation, user-friendliness, scalability, and public trust are simply too high to be fully cleared for every single person on the planet in that time frame. Your grandmother will most likely still be paying with cash or a credit card, and the dollar will almost certainly still be king. However, that doesn't mean crypto will have failed. By 2030, crypto will have found its place as a powerful, integrated part of our digital lives, even if we don't always see it. It may make international payments faster, prove you own your digital assets, or track food from farm to table. You might use it without even knowing you're using it, in the same way you don't think about the TCP/IP protocol when you send an email. It could become the quiet plumbing of the new digital economy. The journey from now until 2030 will be crucial. We will likely see a battle of ideas, with more user-friendly applications competing for our attention and more efficient blockchains rising to the top. The successful projects will be the ones that solve real-world problems for real people, not the ones that just have the most hype or the wildest price swings. The focus will have to shift from speculation to utility, from what is the price, to what can I do with this? This shift is the single most important factor that will determine crypto's long-term success and its place in our future society.